I'm Danielle Hale, Chief Economist at Realtor.com, and here's what you need to know about the economy and housing market this week. The key data update was inflation, which continues to flash mixed messages. On the one hand, overall inflation improved. On the other hand, core inflation, which can be a signal of underlying price pressure, ticked up. After September's larger Fed rate cut, investors and the Fed had different expectations about what was ahead, with the market far more confident in the likelihood of larger cuts than the Fed was. After recent job and inflation readings, however, the market has shifted closer to the Fed's outlook, expecting just 50 basis points in cuts by year's end. For mortgage rates, this means that declines have actually stalled and even reversed. After the largest one-week jump in 6 months, mortgage rates registered 6.32%, roughly a quarter point higher than recent 2-year lows. The prior drop in mortgage rates had helped revive home purchase sentiment, with an uptick in those saying it's a good time to buy. We may not see an immediate flood of buyers back to the market, as a new record high 42% of respondents said they expected mortgage rates to drop lower in the next 12 months. Some shoppers may indeed choose to wait for these lower mortgage rates, especially given this week's higher trend. Even so, mortgage applications for home purchases have continued to trend higher than 1 year ago for a third straight week. In weekly data from Realtor.com, we see that today's shoppers face conditions largely similar to recent weeks. In this typically buyer-friendly season, listing prices are steady, and new listings continue to grow from a year ago, helping to push active inventory higher. Meanwhile, time on market gives shoppers more time to consider options, as sellers practice patience. Nationwide, we're in the almost best time to buy, where listings are usually somewhat scarcer than in the best week. But otherwise, buyers are still in a good position. However, in San Francisco, Baltimore, and Kansas City, I see you NFL playoff hopefuls, the best week for buyers is coming up next week, October 13th through 20th. Finally, an analysis of homeowners and mortgages highlights variations that could drive the housing market's reaction to lower mortgage rates. In younger cities where homeownership rates are lower, a greater share of homeowners have mortgage debt, while in markets where homeownership is more prevalent and homeowners are older, a greater share of homeowners own their home outright, with no mortgage. As mortgage rates decline, these markets with more widespread mortgage debt could see a greater pickup in housing activity. You'll find all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates. And now Instagram at Realtor.com Econ for graphics.